What's up, everybody? Thank you for tuning in to another episode of the CPA Zone, the podcast where we discuss tax strategies and accounting tips for entrepreneurs and real estate investors. My name is Ryan Pulis, and our company, the Pulis Group, offers tax planning and advisory services for entrepreneurs like you. Whether it's bookkeeping, tax planning, or CFO services that you're looking for, we've got you covered. What's up, everybody? Ryan Pulis here with another episode of the CPA Zone. Today, we're going to talk about two key forms from your tax return that every real estate investor should become familiar with. So those two forms are your Schedule E and Form 8582. So Schedule E is a simple two-page form that reports the income and losses from your rental activities. Form 8582 is another form that tracks all your suspended passive activity losses. So any passive activities you're involved in, whether they're rental properties, syndications, businesses that you don't materially participate in, any suspended losses you have from those activities is tracked on Form 8582. So let's start with Schedule E. Now this form reports your rental activity income and losses. Page 1 looks similar to a P&L, and it's used to report the income and related expenses for the rentals that you own in your own name or maybe through a single member LLC. Basically, they're not held in some other entity that files its own tax return. So those rental activities get picked up here on Schedule E, page 1. So at the top of the page, you're going to report the property address, and you'll also indicate the type of property it is. So it's single family rental, multifamily, short-term rental, is it commercial or raw land, self-rental. So there's various options up there, 8 in total, to choose from to indicate the property type. So you're basically letting the IRS know what type of rental property this is. There's also the two boxes, one for the total fair rental days for each property during the year, and another for any personal use days at each property. So remember, personal use days at any rental property may end up limiting some of your deductions. Next is the meat of this page, and it's the portion that it really just looks like a P&L. So at the top, there's 3 columns, so you can have up to 3 properties per Schedule E. If you have more than 3, simply add another Schedule E to your return. And you're going to have at the top a space for the rental income, and then there's a list of various expenses the IRS likes to see itemized, and then a section for other expenses at the bottom if there's not a category specifically on the Schedule E for the expense type you're dealing with. A good example is you'll see HOA fees or condo fees down here under other. Now at the bottom of the page, your total rental income and losses are summarized for all properties on page 1 of Schedule E. So if you have multiple Schedule E's because you have more than 3 properties, then the first Schedule E is going to have the summary at the bottom showing the overall income or loss for all the rentals reported on this first page of Schedule E. Now, page 2 of Schedule E is where you report income and losses from your K1s. So it doesn't matter if you're invested in a syndication or maybe it's a small partnership with family and friends that you own rental properties together in. When you receive a K1 from a partnership at the end of the year, it's going to report your share of the income and loss from that partnership activity. Well, this K1 income, loss, and other activity gets picked up on page 2 of Schedule E. So each K1 gets reported on a separate line on page 2, and the income or loss that's reported is categorized by being passive or non-passive. So there's different columns for each. Now at the bottom of page 2 is a summary section. So this is important for real estate professionals because at the very last line on Schedule E is a reconciliation for real estate professionals. On this line, you report the total income or loss from all rental activities that you materially participated in during the year if you're a real estate professional. Now that does it for Schedule E. Let's talk a bit about Form 8582. So this form tracks all your suspended passive activity losses. Remember, losses from passive activities are generally deductible only to the extent you have passive income, unless you meet one of the exceptions, such as qualifying as a real estate professional in which case some real estate professionals may not use this form at all because none of their losses are passive and suspended. But for everyone else, this form tracks all your passive losses. There's 9 different parts of the form. We're not going to go over each part in detail, but we'll cover the basics. So the first part on page 1 shows your total passive activity losses. So there's current year activities, which are broken out by those that have income and those that have losses, and then it shows the prior year unallowed losses, and then they net and show the total, which is summarized in this part 1. Part 2 of the forms reports any activities that are subject to the special allowance. That's the $25,000 special allowance for those with modified adjusted gross income of under $100,000, because there's some opportunity to deduct rental losses up to $25,000. So that's in part 2 of this form. So if there's any unused allowance, then that will also be tracked here. The next several parts are used to report your total suspended passive activity losses by activity. Each activity is reported separately. So it's rentals you own, K1 activities, if multiple K1s, if multiple lines for K1 activities, multiple rentals, you'll have multiple lines for the rentals. Each activity's got a separate line. This allows you to track the amount of suspended losses by each activity that you report on your tax return. So you're going to have the summary up on page 1 and under part 1, the total suspended losses. And then on these other sections, you're going to see each activity broken out, and you can see the amount of loss that's suspended for each activity. Now, the reason this form is so important, maybe even more so than Schedule E, is that it tells you the available losses you can use if you have an event such as maybe you're selling a property that's going to result in a gain. You've probably heard of the lazy 1031 exchange. That's referring to using suspended losses that can be found on this form to offset the gains from a rental sale without going through the process of an actual 1031 exchange. It can save you the time and effort. If you have enough suspended losses out here to offset the gain from a sale, it's much easier to utilize those losses that go through a 1031 exchange process, which has special timing rules. There's additional fees involved. So it's an important form to become familiar with so you know what you have out there that's available to help offset those gains. It can also be useful if you're looking at an investment that's going to generate passive income. You can look at your Form 8582 and see how much income you're going to be able to shelter before you start paying taxes on the passive investment that's going to spin off income. So that about does it today for our discussion on Schedule E and Form 8582, the 2 parts of your tax return every real estate investor should be familiar with. I hope you found value in this episode. If so, please leave us a 5-star review and hit that like and subscribe button. Until next time, have a great day. One last thing before you go. We have put out a free ebook for our listeners. You can find a link to this in our show notes. It's called the Rental Real Estate Investor Tax Guide and covers all the basic tax-related information for real estate investors. We hope you like it. Again, go to the show notes to download your free copy. So that about does it for this episode of the CPA Zone. Thanks for listening, and I hope you found something valuable that you can take away. We are taking on new clients, and if you'd like to work with us, then go to our website and fill out the client intake form on our contact page. This can be found at thepulisgroup.com/contact. That's ThePulicegroup.com/contact.